Are you tired of 2020 being a constant downhill journey? Do you want 2021 to be better and more rewarding? Did the shutting down of businesses and frequent market instability personally take a toll on you too? Well, I think we all deserve better. And 2020 has been a tough year, no doubt. But as they say, hope makes the world go round or something, I don't know. Anyways, nothing says to cheer up better than Benjamin Franklin on a $100 bill. But again, with a lack of surety in the market, how can an investor turn a good profit in the comfort of his or her own home? The answer to that may be absurd to some. Stocks. Now you might think, hold up, aren't stocks a gamble? And my answer to that would be, yes sir, they are. But nothing is 100% certain, and if you want to take the least amount of risk, a wise and calculated investment in stocks may be your ticket to riches. Before we begin though, please be sure to subscribe and hit the bell icon so you can get notifications every time we upload more useful videos like this one. Here we go. Number 10. Nestle. Everyone knows Nestle and everyone loves it too. So why not invest there? The truth is, Nestle did hit a low point in March, but it was quick to recover since, of course, it is globally reputed. The company is what we refer to as a consumer staple. These are companies that provide goods and that are used in the daily life of consumers. We all know that Nestle deals with the food, items, and consumables. Truth is, 2020 has been a good year for all consumer staple companies since people started stockpiling goods that they consume daily. This afforded Nestle an enjoyable growth in the market, just as many others of this kind. But what's unique about Nestle is its history and reputation as a trustworthy companion. Users will never cease to consume its products, and it will continue to grow as a consequence. Number 9. Coca-Cola. Okay, so we all know Coca-Cola too, right? Like Nestle, Coca-Cola hit lowest for the year in March, but historically looking, its stock prices have steadily gone up and the trend continues. The March fall was rapidly compensated for and the average growth has been positive since. Again, trust is a key player, and with Coca-Cola being one of the largest companies out there, investors will continue to see the potential, as should you. Berkshire Hathaway, Warren Buffett, the world's most successful investor, company owns the largest share in Coca-Cola, so you'll definitely need to feel confident. No one makes better investment decisions like that guy. The company offers a 3% dividend and has increased it at least once every year over the past 6 decades. Number 8. Lockheed Martin Corporation. You simply can't imagine a cooler name. Go ahead, I'll wait. The aerospace giant did see a noticeable dip in its stock prices in 2017. But trust me, the name is not just why I recommend this company. Lockheed Martin made a quick and outstanding recovery, and recently its quarterly dividend payments have gone up to 8%. The flow of money pumped into this peaceful Goliath of a corporation is phenomenal, and investors can almost lay back and relax, knowing how cool a company they have invested in. Growth has been positive since 2017, and there's no forecast of any dips in the near future. Number 7. MasterCard Incorporated. Well, if we're investing money, we probably already know what MasterCard is. I'll admit the company did see a dip in 2017, but hey, they are stocks, and we all know nothing is sure, but based on predictions and existing trends, we know that the company's stocks have seen massive improvements, almost doubling consecutively from 2017 to 2019. 2020 did see a little lag, but the growth is still positive. It's almost as if the stock prices for MasterCard are resilient. Honestly, the rise is considerably slow now, but with almost 60% raises in quarterly dividends last year, a rebound seems likely. However, growth is still positive, and so am I. You will not lose your investment. Number 6. Costco Wholesale. Retailers generally have it though in the stock market. However, that's exactly why there's plenty of opportunities. Costco has been defiant of this trend, and that's all because of its specialized discount tactics and simple operative mechanisms. It doesn't require much attention to detail and running costs lower, substantially increasing the profit. Due to the special discounts, its customers tend to be fiercely loyal. With other competitors having it though, you can bet the fittest will emerge victoriously, and that's exactly why Costco has profitable stocks. The pandemic helped too though. with customers stockpiling causing stock growth rates to increase from 10 to 30%. With 2021 apparently vowing to be an aftermath of 2020, you can bet on Costco stocks to earn you a sure and decent profit once more. Number 5. Starbucks Corporation. We can all agree that Starbucks is at the top of its game. Its stocks are doing pretty well too. It's all because we know that coffee does not get better than this. Despite a small fall due to the COVID-19 pandemic outbreak, the coffee house made a sure rebound and subsequently made investors pretty happy. Based on my experience, Starbucks is profitable whether you want to bid for a day or keep stocks for the long run. What's likely is your investment will have a pretty good return. The company has had an overall upward return for the last couple of months, and we can be sure that this trend will likely live on into 2021. Plus, every time you're watching your stocks grow with a Starbucks coffee in hand, you can feel content knowing you're working with the best. Number 4. Abbott Laboratories. Abbott Laboratories saw considerable volatility in the last decade, but the past 2 years have been exceptionally profitable. The company has been doing well in the stock market, and this has resonated onto investors that are keen to benefit from this. In the first half of 2020, its consumer-facing businesses offered a 10% profit on issued stocks, and dividend payment have increased significantly in the last 2 years. This may sound crude, but with a global pandemic at hand, nothing says profit like a medical device and healthcare company. Number 3. United Health Group. Okay, I'm not trying to sound cruel, but the world is what it is. Healthcare companies have seen businesses improve owing to this pandemic, so the investment turned out to be profitable for 2020. However, United Health Group has a decent growth for 11 years now, rising from just $0.03 quarterly payment in 2009 to $1.25 in 2020 in the New York Stock Exchange. The growth was steady over the years and especially in 2020. Of course, June saw a 15.7% hike, and that's something sure to make investors really happy. As for your bet, I'd say 2021 is, unfortunately, going to have a few remnants of 2020, so healthcare companies, particularly United Health Group, is bound to do good. Don't judge me. Number 2. Broadcom Incorporated. Let's talk about science. Broadcom is a semiconductor manufacturing company that specializes in making a wide variety of infrastructure software products and, of course, semiconductors. For the 9th year in a row, Broadcom has kept up its dividend growth, and there are no signs of stagnation. Broadcom's business is continually booming with a constantly increasing demand for telecommunication services and cloud data servers. The iPhone 5G surge and other constant struggles for improvement in communication technologies create a steady demand for Broadcom's goods. The company turns a good profit in both the short and long terms. With a dip in March 2020 alongside every other player in the market, Broadcom made a comeback and its growth actually multiplied. From $145 at the start of 2016 to almost $400 today. Stock prices are undeniably growing, and they are growing at a remarkably sure pace. Number 1. Amazon. If you've invested in stocks before, this really shouldn't come as a surprise. Amazon is all high stakes, but with a certain level of surety. From around $1,700 per share by the end of 2017 to almost $3,300 a couple of days ago, Amazon plays big. The company's success and growth is no mystery. Everyone wants to shop online. It's just really convenient. With stakes in e-commerce, cloud computing, artificial intelligence, and digital streaming, it's understandable why Amazon continues to show remarkable growth in this age of information. Wall Streetson predicts a 20% growth in 2021. With an end to 2020, I'd place my bets on Amazon and recommend you to do the same. So next time you shop online, shop for a couple of Amazon shares too. Well, that's it for my top 10 recommended stock investment for 2021. I should reiterate that stocks tend to be unpredictable and tricky sometimes. All we can do is try to make the best bet and calculate our chances. So I recommend you to do a little additional research before putting in some money. Anyway, I hope this was fun and helpful. Please subscribe if you haven't already and leave a like and comments. Keep watching Luxury Sensei. Peace out.